Morning, Steve Freed in Chicago with the morning grain comments. Well, we have a little bit of a turnaround in prices overnight. We're a little bit lower. Beans down about 10 cents, corn 4, and wheat 7. Dollars higher, and most commodities are lower. I think we're getting a little bit of trader reactions to concern that U.S. economy could go over this quote-unquote physical cliff. We're also starting to see some earnings pile up that shows better than expected earnings, but forecasts that down the road sales and earnings might decline because of a slowdown in its global and U.S. economy. Yesterday, USDA estimated corn harvest almost 90% done. Most of the corn in the Midwest is done. About 80% of the beans are done, and in the north, key soybean states are also almost completed. This should offer some support to the nearby market. There is still talk that the soybean crop here in the United States could be a little bit bigger than what the last government estimate was, while the corn crop is probably pretty close to what the USDA is saying. Weather-wise, looks like South America, we're continuing to see Argentina, southern Brazil with forecasts for above normal rains. That's slowing some of the planting conditions there. Northern Brazil, kind of a mixed bag. Some of the weather models suggest a normal to below normal rainfall. Others suggest some of this rain in the south might move up into the northern areas where they actually need a rain. Yesterday, here in Chicago, the USDA had their annual data user meeting in which they invite people from the industry to talk to the various USDA people in charge of crop production and global supply and demand. The USDA defended the fact that they do give reporters the crop report numbers prior to the release so they can get the numbers ready to be released. They say that it's strict security that these numbers do not get leaked out. They're also comfortable with their world production and demand numbers, the current estimate of the U.S. crop, and they defend the corn stocks number and the corn feed usage numbers, but also warn that in the future it may be even more difficult to do this job at the level they want with some budget cuts. We also are looking pretty closely at some of the technical considerations of the market. You've got corn at the upper end of the trading range. You've got beans that are kind of the midpoint of a trading range, trying to bounce through some key resistance, and it seems like it's having trouble getting through that level. And the wheat market kind of back up to the higher end of the trading range. So we'll see if we can find some support underneath the market as we go through a post-harvest trade. As always, these are my thoughts and not those of ADM Investor Services or ADM, and have a safe and profitable trading day.